November 7th, everybody. So it is Thursday morning. A number of news that came out this morning was telling us how wonderful and dandy everything is. With advanced GDP, unemployment claims, everything coming out with spectacular and awesome data. So why in the world am I shorting S&P? Because S&P spelled out very clearly it's due for a pullback. Decision point 1 had been reached. 2 points are here, not to be taken for granted. My short on oil, I'm incredibly careful with. My short on oil had reached decision point 2. My break-even stop had already been reached, because we knew very clearly that despite oil reaching danger zone level, this pullback was a fluff. So I absolutely respect this, and I absolutely recognize that price may do this fascinating dance, but I expect oil to push further down inside danger zone 1. That would be my incredibly exciting buying point. But this was a very quick short. For what? 10 ticks. And here is S&P at decision point 1, 2 points. Stop BE, we're done. I expect buyers to show up. You can see how precise the levels are. It doesn't matter what instrument, what time frame. So let's review the levels and what I would be incredibly excited and what I cannot wait to see happen on S&P today. I expect S&P to continue further up. That's why I'm protecting my profits on 13 range chart. I expect S&P to make it to the danger zone. This is a level incredibly critical. This is where I will be incredibly excited to see S&P at, and we'll be looking to short S&P there. Why? Oh, why? Because very clearly know your levels. This is where S&P collapsed from yesterday. This is where we enjoyed our ride, and this is where S&P will be today. As you could see, the magic of the puzzle continues. Decision point 1 on daily chart is next. When you see the correlation between very critical daily levels with the hourly levels, with the weekly levels, it should be a fun short. So, but until then, we'll be looking for more long opportunities, and that's exactly why I'm protecting my short 2 points on S&P, not to be taken for granted. And as you could see, if you know where these levels are, you can trade any instrument and any time frame. Just recognize and identify what's important for you. That's all there is. So let's see what S&P will do next. That I expect buyers to show up. I'll be looking for buyers on other time frames, and I'll be looking for oil to go a little bit further down on other charts as well before I will enter another trade on oil. That's simple. Know when to move your stop to be, know where to take profits off the table. Trading does not need to be complicated. When you see the opportunity, you take it. When you see the fluff, when you see the flappuccino, you walk away from computer. And each and every time I see the precision of Fibonacci levels, it's a picture perfect reminder. Nothing in this world is random. Nothing. Not even price. Take a look at decision point 1 here and take a look at the analysis I had done on Apple. The weekly chart, exact same point. This was the end of the minor bearish trend. This is where buyers showed up. We'll be looking at more long-term stocks. What are you seeing? You're seeing buyers stepping up, looking for long on S&P, monitoring oil very carefully. Very two solid trades. Happy Thursday, everybody. When oil reached decision point 1, it staged very powerful reversal and collapsed for all the reasons you learned in the course. And here it is, acquiring trend positions anywhere here where trend is completely exhausted. It's just simply bad idea, dangerous habit, super duper aggressive trading, waiting for danger zone to be reached and be monitoring for long opportunity. S&P, After our lovely 2-point short, waiting for long opportunity as well, as I expect S&P to make it, hopefully sometimes today, to the danger zone levels 1778.50, 1778 area. This is how critical these levels are. Most critical, decision point 1, the end of the minor trend, and danger zone, the end of the major trend. But caution, we know oil, it can dance here and flop a little bit lower. Time to get excited about where oil is, because we knew that it will push a little bit further down. So, shall we buy S&P? I certainly think so. Let's go. Long S&P, long S&P. So there we go. Pull back on S&P at any moment. Monitor very, very carefully. That's what we waited for, correct? We knew when buyers will show up, they will show up with vengeance. So there we go. Third trade this morning. If you know the method, you don't have to wait for me. Multiple powerful opportunities everywhere. Very, very quick trade of S&P. We are out with 3 ticks, and here is danger zone on oil reached. Again, oil still not at the levels we'd like to see it, but this is a reminder, know what not to enter into. So still monitoring oil incredibly carefully before I take a long time. Okay, at any moment I'll be adjusting my stop to break even. We completely expected this. 1759, pretty please, do respect that level. Adjusting my trail on S&P 1757 and a quarter. Again, if S&P will break through the danger zone levels, we're migrating into the long-term structure. I'll be taking trades on other time frames. That's what we waited for and monitored for incredibly patiently. Now, is this meaningful or is this fluff? I would like to see price to blast through this level. This is where we'll have incredible fun. But you do know what it means when price reaches danger zone, correct? Formula remains the same. It will be my long trade exhaustion level. And if my trade will blast through this level, I'll be migrating into larger time frames. Clear? Pay attention to the power of these levels. Pay attention to how precise these levels are. This is exact same formula on S&P 5 range as I'm analyzing Humana monthly chart, instructing where to buy, where to sell. Those who trading position structure. Buying Humana here, very bad idea. This is what price does when it reaches danger zone levels. Simple. So what will S&P do when it reaches danger zone level? Price does not make it to the danger zone level, but oh my lord, 1 point on S&P. Third trade this morning. Respect what price is telling you. You are seeing how important it is to respect these levels and to take your profits off the table, not exercising greed. So will oil finally give us a meaning? Oil is almost where we'd love to see it. Almost, not exactly. So what will it do? And will S&P finally make it to the danger zone? It would be so good if it would actually break through it. Go yes, you can make it further. Alright, watch out for the fill at 1760. Stop, break even. Third trade on S&P. Only 1 trade on oil. So you are monitoring how critical it is to respect what price is telling you. That's precisely why I moved my stop to break even. So pretty please, those of you who are taking 1 point off the table and say, oh my god, it's not enough, do remember, SEC Capital built its fortune starting trading 1 lot. SEC Capital was built to multi-billion-dollar empire trading S&P 1 lot in diapers, literally. If you start today with S&P 1-2 lots, years from now you can trade mega lots if you can play by the rules. Okay, price is moving. Will S&P shock us and blast through the danger zone? Again, you know the danger zone is my trade exhaustion level, correct? Watch out for the fill, pretty please, as danger zone will be reached we will catch a push to the downside because that's trend and trade exhaustion level. Okay? Yay! S&P is rallying. Pretty please take some profits off the table, trailing 1758.75. Woohoo! But we do know that price will give us a bit of a pullback on danger zone, but we also do know price will blast through this area. We're looking at long-term charts. It means we caught the inception of the bullish trend on 5 range, but price moving much further out. So this is the moment of truth. Will our adorable smallest chart I will ever touch, which is 5 range, this lovely rally on S&P is 2, almost 3 points in profit, but we do know when danger zone reached, that's when sellers showing up, because this is my trade exhaustion level. That's why my trail is 1759. If price will blast through this level, I'll be going into long-term position. So here's the precision, here's the key. We expected the pullback of the danger zone. I am out on a trail, and this is the power of alpha wave trader method. It doesn't matter if it's S&P 5 range, it doesn't matter if it's oil hourly, it doesn't matter if it's Apple daily. Know where danger zone levels are. Know where to take profits off the table. Apple is going down, down, down. Don't care about any dividend announcements because, as we'll discuss in Alpha Wave Trader Club, if something incredibly important happens, Apple is heading all the way down to 500. Will give you a beautiful buying opportunity. That's simple. Learn what price tells you and you can trade anything. As I spelled out, danger zone had been reached, my trail had been hit. S&P is heading south. S&P had not been able to break through the danger zone. So here we are, 2.5 points later. Absolutely predictable and clear. Nowhere not to acquire trend position. We've been in this super duper aggressive trade on S&P for the last 20 minutes. As I spelled out, it's only a corrective bullish trade. But this has been a phenomenal trade on S&P. 5 trades in one day. Quite a record, pretty unusual. But there were 2 or 3 other trades when I was not available for comments. So will S&P make it? Will it continue dancing and will blast through decision point 1 as oil remains completely miserable for all the reasons you learn in the course? Oil had reached danger zone. Short trend is very tired. But buyers are absolutely unattractive. Buyers are completely worthless. Waiting for oil to shock us as S&P assumed personality of oil. Go S&P pretty please. We know it's pretty aggressive. We know it's pretty corrective. But finally you are behaving yourself so well. 5 trades. All profitable, not to be taken for granted. Trail 1754. Woohoo! At any moment, moving my stop to break even. As you can see very, very clearly, 5 range chart is a chart where we're catching all the trades because nothing else is available. I would never touch 5 range on oil. Okie dokie, moving my stop to break even. 2 points S&P. Trade number 5. So far on S&P I had this week 11 trades already. 11 trades, only 2 negative. Oil 7 trades, only 1 negative. 19 trades, 3 negative between 2 instruments. So again, you already witnessed on multiple trades how price reacts close to the danger zone, correct? You saw how sharp and volatile these formations are. Finally, oil is giving us meaning. Finally, reversal from the danger zone. Is everybody clear why I did not acquire short position? I spelled out, know when to stay out. This is exactly what you learn in the course. Oil is due for a pullback, monitoring for long. S&P due for a pullback. It's very close to the danger zone. Trail 1755 and a quarter. This excruciating aggressive trade Another 2 points later, lasting another half an hour, is still on. Quite revolutionary day on S&P. 5 trades in one day and only one trade on oil is very unusual. I expect S&P to head south, south, south. It's only temporary pullback. Major trend is bearish. You're witnessing prices struggling very, very close to the danger zone, so it's incredibly typical on S&P. Watch out for a fill close to this level. So as you're witnessing, S&P is the beast, and oil took personality of S&P. This corrective bullish wave is rallying. Would be such a lovely surprise if it will blast through the danger zone, but I assure you, it's highly unlikely. So therefore I trail very, very carefully. Pretty please don't ignore this level as you witnessed multiple times today. What happens when price reaches this level, correct? That's why my trail is so close. So here we are, 3 points later. Another 5 range, magnificent trade. So will oil finally behave? My trust stop on oil 94.17, long 94.28. And oh no, how predictable is S&P? Danger zone had been reached. Pullback is due. So here we are, finally second trade of the day on oil. Will oil finally start behaving itself? Instead of torturing us as oil assumed personality of ES. Clearly, this was our spectacular, monumental, torturous and super duper aggressive trade 5. And this is only trade 2 on oil. Come on, oil, you can do it. Behave. You're not S&P. What's wrong with you? Oil, thank you so much for finally behaving and finally confirming what we've been waiting for. Buyers are here with vengeance. Our trade is flying. Can you make it through the danger zone? We'll migrate into larger time frame expansion. Trail 94.23. Go oil. You are not ES. Pretty please remember that. That's the reason why you are so loved by adrenaline junkies. This is a volatility that you have to respect on oil highly. This is exactly what low volume instrument does. Sharp, drastic volatility. The end of the minor trend is here. Will this trend have any meaning? That's the key level. So our adorable corrective move on S&P continues. If I'm gonna blast through the danger zone, 5 points later, I'll migrate into a larger time frame, and this correction is here to stay. What does it mean? It means buyers will continue dancing on larger time frames if price will blast through the danger zone level. Trail 1758. 6 trades on S&P in one day is insane amount of trades. 2 trades on oil. Oil is struggling, sitting here for the last 20 minutes, can break through the end of the minor trend. Oil assumed personality of S&P. The beast of the indices is Miss S&P. It's no longer sleepy, but the reason why it was super duper aggressive trade and the reason why I'm being here in a trade for an hour is because major trend is bearish, but your best friend is here, therefore respect it. And when you take a course, you learn who your best friend always and forever is. Next class starts on Monday. Finally, oil is doing something. I'm moving my stop to break even. So there we go. Our patience and discipline had paid off. So what are you witnessing when price came to the danger zone on oil 8 range? This is the power of alpha wave trader method. You're witnessing S&P 5 range, you're witnessing oil 8 range, and you're witnessing oil 1 hour. Formula remains the same. Know where danger zone is, know where to monitor for reversals. So there we go, phenomenal day. Total of 8 trades. Only second trade on oil, 6 trades on S&P, 0 negative. Trailing oil incredibly carefully. My trail on oil 94.31. Please respect what price is telling you and be incredibly careful. If S&P blasts through danger zone level, we are going into a larger time frame expansion. So both oil and S&P sitting very, very pretty because my trade exhaustion level had been reached. Alright guys, my trailer oil 94.35. So here it is. This is picture perfect reminder how essential and how critical the knowledge of these levels are. It doesn't matter what you trade, what instrument and what time frame. It was picture perfect day to see how critical knowledge of Fibonacci levels is and how important it is to respect what price is telling you. Our torturous, super duper, endless, aggressive trade on S&P is still on. My trail 1759 and oil being incredibly slow and sluggish, confirming everything we've been waiting for. So if you know what to do, you will have more opportunities to trade oil. Once again, know where danger zone is, know where to monitor for reversals. Simple and clear. 6 trades S&P, all positive. 2 trades on oil, all positive. Have a fantastic weekend, everybody. Look forward to seeing you on Monday. And Alphys, I'm still waiting for the wave class link. I will be posting and emailing it to you shortly. Adios. Love you.